Good morning, everybody. On behalf of Hall Venture Group, I'd like to welcome you to the SF Venture Summit.
The startups in the venture industry have emerged, and those startups are called angel investors. So those angels, I think, originally came in with a somewhat different business model than the VCs did. They made decisions differently. They allocated different amounts of capital. They moved at a different pace. And they had even different expectations about the outcome and different outcomes they were happy with.
There's a lot of change out there. Are all the large traditional VC firms that have been out there for a long time, they've been raising large size funds and giving out lots of money to early stage companies, are they still being able to operate the way they were operating a few years ago?
Most people, when they're doing startups, it's all production cost based on headcount.
I do think, the liquidity window is open. It was slammed shut a couple of years ago, and hopefully we'll see that continue for a while. But I can also tell you that the liquidity window will be shut again.
Very few of them are positive exits. And
I agree,
small
because
number
you're
of
generally
them-
aiming for $500 million to $1 billion
So-
exits, but if you're aiming for $100 million to $50 million exits, the batting average might be.
Yeah, exactly. Okay, we're going to take away your mic. But anyway, you have to have, so the way the averages, yeah.
We get calls on, weekly, monthly basis from East West Coast firms, because when we started, we weren't going to be beholden to Austin Ventures. They are a great firm. We've syndicated with them. I love those guys. They're great. But we made an effort to reach out to VCs across the country. We've been doing that ever since.
From the other direction, doing good is good business. What we're talking about here is the emergence of social ventures.
As soon as you put social in front of something, if you're talking to like hardcore Republicans, they accuse you of being a fascist. So you got to be really careful, especially when you leave the Bay Area. You kind of want to drop that term. And it's like when I visit my in-laws, in Wisconsin, I always got to drop that term. So, I like the emergence of impact investing. I like that terminology. I mean, since I've been at GoodCap, it started off triple bottom line, then it was blended value investing, now it's impact investing.
What we have chosen to do is to rely on our advisors, our three advisors in the public space, to provide us with opportunities. And what we've ended up with is just investing in clean tech ETFs. And they said, here's a suite of offerings, here's a suite of opportunities, here's the returns, but there's also the returns of the ETFs, which provide us with flexibility and the quick exit. And that's what we've chosen to do, is just work with clean tech ETFs.
Today's discussion will explore a variety of topics, including how's the startup environment evolved, and how do we view the environment? How are we supporting the companies in our investments?
To see how capitally efficient you can start a business, I think that's a big deal. There's so many of these big trends that help along with that. I mean, running your business in the cloud, whether it's you compute on Amazon EC2 or using virtualization to save kind of the hardware costs that you have, and maybe not having to ship a system with your product if it's software heavy, putting that in a virtual appliance. There are a lot of factors, I think, that lend themselves to raising a capitally efficient business.
When efficiency changes at the low end, expectations start rising as more and more dollars you get. But realistically, the ability for an entrepreneur to get in this market, pick any of the three bubbles, social, cloud, mobile, the on-ramps to the customer are essentially free.
First and foremost, looking to see if the team is solid, because at such a young stage, the idea is going to change drastically. Every single company I've started, it's kind of always shifted and molded into something else. So we're looking kind of like, hey, is there kind of like one good core technical co-founder? Is there a really good biz dev guy? Is there potentially a designer, or is maybe another technical guy on the design side? Like, we try to find a team that is going to fit well with each other. We're also looking to see if the teams actually work together. If they just met each other last week, it's like a relationship. We want to make sure that they know how they work with each other, what's going on, that they kind of have a good kind of working relationship.
All four of the panelists here, as we've talked about also, are investing both here in the U.S. and outside, which is not the typical case, from my experience, of many of the venture funds that you can find here that are putting dollars to work here in the greater Bay Area.
This is my view of how venture capital investing evolves in a developing country. So in this pyramid slide here, you can see what I believe phase one is when you take a country like India or China, that initially what they have to sell to the world and export is low-cost labor.
We see in terms of differences between companies that we're funding over there and over here is that in China, it's still, a lot of the innovation focuses on hard technologies, such as hardware or systems, and we haven't seen as many compelling early stage software companies that we wanted to do out there as we have here. Here we've seen companies that can very rapidly scale, and so much of the ecosystem, and especially the ecosystem we understand, is here.
The young entrepreneurs typically succeed because they are visionary and ambitious and have no fear, but also because they have an ecosystem that helps them succeed and fills the gaps and educates them and brings the expertise they don't have.
There's way too much venture capital here. And there's a handful of funds that get all the hot deals, and all the rest of them are sheep. Okay, so everybody says, you know, well, one top firm says social networking's in, bam, you have 200 funds that are now doing social networking. But only the top handful of funds get the hot deals. If you don't get one of those top funds, let's say you move here from Romania to try and get funding here, then you kind of have a second or third or fourth tier fund. It's not necessarily going to make your future any easier unless you have some very exciting operating metrics to go raise the next round.
I think that the most important aspect of all of this is that there is an opportunity emerging out there for people to pursue their passion, whether it's in the for-profit world or the non-profit world. And it's a cliche, but I think it's a cliche that's valid because it is true. Pursue your passion, the money will follow.
I mentioned on the panel, we talked about plastic recycling, we talked about new kinds of membranes for desalination projects. Those are examples of technology that we think could do a lot of good if we can find a way to bring it to bear on these problems.
And would you have any advice for women who want to be venture capitalists?
Oh, wow. Work in a company, get great experience in a company, and in particular, as close as possible to the product and the revenue. Don't work in corporate marketing, don't work in the parts of the business that are the pink collar ghettos. Be close to where the value creation is.
Fantastic.
And that's how you get
That's brilliant. Thank you so much. That's really wonderful. Thank you.
Thanks. Thank you. Okay.
So.